Welcome. Thanks for coming out to Appchain Day Hong Kong. This is obviously the Appchain Investment Landscape Panel, Part 2. Part 1 was during our Denver event, but a lot has actually changed in 1 month. With the narrative around app chains, application-specific chains, and sovereign block space, even just in the last 30 days. So felt it was appropriate to have another investor panel today, and we're lucky to be joined by some really prominent people in the space. So would love to give all of you an opportunity to introduce yourself to the audience now, and then we can kick off to questions. Sky, why don't we start with you?
Cool, yeah. I'm Sky from J7 Capital. So we're a dedicated crypto VC arm from a Canadian family office fund. Then we do like fund-of-fund investment and direct investment. Thank you.
Hi everyone, my name is Peter from Wampo Group, which is a Singaporean-based family office. We manage a early-stage crypto VC fund, and we're a proud investor into Dora.
Hi, I'm Seth from Coin Fund. We're a billion-dollar asset manager in the crypto space with early-stage venture, mid-stage venture, and liquid investments. And I'm based in New York.
Hi there, this is Calvin from Spartan. We're a Asian VC fund. I've been investing since 2019, currently running 3 funds, a hedge fund, a DeFi infra-focused fund, as well as a gaming fund. Excited to be on this panel, and we're great to chat afterwards.
Hello everyone, Sam T with Animoca Brands. We are quite deeply rooted in Hong Kong, where you're sitting. We invested across 400 plus portfolio projects across gaming, entertainment, culture, and obviously also the infrastructure that supports them. Looking forward to the chat.
Awesome, thank you all. And we'll try to keep it as free-flowing as possible just to kind of, get some discourse going. But obviously AppChains is something that's changed forms a lot, kind of like a strong opinions loosely held kind of vibe. So we'd just love to throw it out to all of you, which is like, how would you define an app chain, specifically from an investment POV? You're looking at a deal, if someone's telling you they're making an app chain, but is it really an app chain? Like, what does that word mean to you, and how would you describe it from an investment perspective? Whoever wants to go first can jump in.
I would just say an application that has its own security setup, whether that's its own proprietary security, or we were talking earlier, the question of whether AVSs, so actively validated services that rely on restaking, would be considered app chains, and we kind of agreed they would be. So any configuration where you're an app that has a dedicated security setup would be my view.
Yeah, and I relatively have a general definition of app chains. I think like as long as they have like app-specific blockchains, and they for example using like a L1, L2 as a security layer, and with the high flexibility, composabilities, and also they can customize whatever they need, customize tokenomics, customize the user experience based on the high throughput needs. So I think that's how the definition of app chains.
Yeah, for me, when I think of a AppChain project, first of all, it has to be an application, right? It just chose a specific chain configuration that's been popularized, in the past 24 months. So in the end, because you ask about what's the length from a VC, so we still view it as an application project, but it has additional consideration around how it set up its own chain.
Yeah, I would say for us, we kind of look at it at Animoca Brands more from a Web3 adoption angle, because I think especially given our gaming roots, over the past maybe 2-3 years, it's much more of how we enable a gaming use case, more a single use case on a blockchain, right? Right now we're talking about projects kind of looking at from building the entire gaming ecosystem atop a blockchain infrastructure. So for us, it's kind of looking at, app chain has become a thing for us to kind of consider whether in investment side and operating side, how we host an ecosystem on a more trustless kind of environment. So this is actually super interesting for us because, we had always the vision of putting, so-called Web2 kind of gaming economies, which is, I think, one of the most sophisticated and complex ones already that has been developed over the past decade, right? We're kind of taking baby steps towards that direction. maybe there's more on-chain gaming projects coming on, but I think if there is a way that we can move towards having projects developing a gaming-specific app chain, that is actually super interesting, and well, that's where the valuation will be coming from.
Yeah, I guess all the panelists covered pretty much definition of app chains. In my opinion, I feel like, yeah, app chains tend to be applications that has great user flow, tends to be like specific verticals, and then migrating onto their own environment and owning their own stack based on different reasons, right? It could be economic or customization reasons.
Yeah, I think that's all really interesting points. And I think kind of dovetailing off of that, I would love to hear kind of just what your general take is on the app chain thesis in general, especially recently with so many new app chains announcing themselves, or so many, dApps basically pivoting to app chains. I think on the flip side of the coin, there are non-app chain investors that will basically tell you to be wary about all of these ghost chains, that even though all of this new block space is being sold, are the blocks full? Are these app chains valuable? And also you kind of lose the monetary premium benefits of monolithic chains and the network effects that they have. But despite that, it certainly seems that app chains at least have PMF among developers, and there's a lot more of them coming, a lot more of them raising. So just curious, like how you view this, if you're still as bullish on app chains as before, if there's anything that you think should be more cautioned about. Yeah, curious to turn it to the room and hear your thoughts.
Yeah, I think definitely we should start with like a why, right? Why app chain, right? So at the end, like app chain is app specific, right? So a lot of apps will consider or will struggle where they should like start from a D apps first on like a L1 to get the liquidity or the network effect of those existing L1, or they should like directly start with like a app chain, right? But at the end, like from a VC perspective, at the end, like we're investing in a project that really drive user adoptions and solve the pain points, right? At the end, if you want to do app chain just because of app chain, you sacrifice a lot of like user experience, sacrifice a lot of the use cases, your use case needs. It doesn't make sense at all, right? So at the end, like when we took a look at the projects like app chains, whether like it's worth investing, we always start with like whether the use case makes sense to be like as an app chain specific use case, and whether the team has such experience on running app specific. Because honestly, app chain the requirement or the resources of running app chains like is way, I think it's like even it's way easier right now, but it's still like much harder and much difficult than like running just an app purely the apps, right? At the end, like we take a lot of like, we do consider like whether the team has such experience and resources on doing this stuff.
Fast answer, super bullish on the app chain thesis. And then I guess app chain, we zoom out, right? Why it matters? It matters, it's a concept within modularity, right? And which itself is a concept within blockchain scalability. And then the reason why it's super important because the point of having a emerging tech is having more people use it. And app chain is the ultimate form of a scalable and modular blockchain, right? And then and there's so many investment opportunities in this space, right? So you can categorize into two buckets. One is any applications wanting to build their own chain, but for those ones, as I said, we still view them as other application projects with a specific chain configuration plan. And the other bucket would be the outer infrastructure or players like Dora that enable the app chain ecosystem to flourish. And then especially, nowadays we have so many, especially in the last 12 months, so many solutions are being ready to be commercialized, like EigenLayer, EigenDA, or like Gelato, Outlayer, Dimension, right? Those are like multi-billion-dollar infra projects. There's some competition, some overlap in their offering, but then Dora is very special in this offering, in the sense that it provides a developer community. It provides a developer tools for these app chains to flourish, which is quite unique. Yeah. So I sound like I work for you guys.
Yeah, we should hire him.
I do.
I think one of the things that you were just discussing and that you brought up, Brian, is interesting, where the question of are you concerned about losing the monetary premium? In the end, I remember exiting ETHCC in Paris, a big Ethereum developer conference in Paris last summer, and everyone was saying there's a lot of great developer activity on the infrastructure stack, but where are the applications? In the end, we need applications to flourish in order to have a real holistic, vibrant ecosystem that's built around this decentralized technology. We're very interested in the Appchain thesis and the development of Appchains. We frankly, though, are agnostic whether an application is relying on other security, whether it's taking a pure Appchain approach. We think all of those approaches should flourish, but we want to see as more applications. And I'd say what's great about being here in Hong Kong is in Asia, we're actually seeing probably the greatest number of Web 2 developers coming over into Web 3, experimenting with Web 3. And anything that makes it easier for them to develop in Web 3 is fantastic in our book.
Yeah, so I guess in short, we are also subscribed to the Appchain thesis as well. Personally, I'm very bullish on Appchain as well. I think it makes a lot of sense for dApps that have great user flow to migrate over, right? So on top of mind, there are a few reasons, right? To elaborate a bit more on my previous point, right? There's the economic standpoint, right? So first one is MEV. You get to own the ordering, transactions. Second of all, better resource pricing. Third reason, it could be, owning your own block space, right? You don't have to fight. You shouldn't, users shouldn't be penalized for someone else using a chain, right? So you can have your own block space, localized fee markets and such. The second big reason would be customization, right? You can have dedicated VMs, like Solana VM, Mu VM. You can also have, just essentially like scale as you go, right? So there are different reasons for, I guess, an app to migrate over. So some of the good examples we've seen so far, I would say it's Avo, a very good like traditional, I guess, like commonly used example would be like DYDX, right? So yeah, these are my thoughts.
Yeah, maybe on Calvin's point regarding customization, is actually quite interesting for us from also, again, a gaming perspective, as in, while I think that the key kind of pain point that we're tackling is how can we kind of scale, right, with lower cost, higher speed, and we just don't want to congest on the mainnet. And obviously, this would work if we want to bring millions of people onto the blockchain. But one thing is, we're seeing very interesting is also the customization point, where let's say if we want to create an on-chain game, for example, right? And let's say if we want to refrain the bots and AI agents from actually interacting with the game. In a public kind of L1 blockchain standpoint, you can't really do it right now, that there's no kind of permission. So we're also kind of debating within ourselves, our team, hey, there maybe needs to be a certain kind of permission structure. Let's say, for example, proof of humanity within that specific app chain that kind of proves, hey, actually it's a human kind of competing with human. So that it is kind of one of the theses that we're looking at, especially for, I would say, gaming L3s or kind of even creator L3s that we're looking at. And you've seen quite a few Orbit chains recently that is quite high profile and would be interesting to see how they develop in terms of the model.
Yeah, I think kind of like going down a different tangent now, just to spice it up for the audience a little bit, I kind of want to ask your opinions on like almost like a more structural question related to the Appchain market right now. And I think probably everyone up here has at least some type of hybrid mandate when it comes to investments, between like primary and secondary. Seth, you in particular might really be able to evangelize this best because you do so much liquid stuff. But when it comes to app chains, are you only just interested in app chains due to the UX improvements they can offer developers in terms of like new infrastructures coming out or new app chain projects coming out that you're investing on the primary side, like bets that maybe will take a little bit longer to pay off? or ideas that you think are important to exist as app chains? Or are you also interested in app chains this cycle particularly because you think on a secondary market, tokens that are part of app chains will outperform even L1s this cycle? So kind of curious to hear your thoughts on, where are you most bullish when it comes to app chains?
I can start as the more focused liquid investor on the panel. I would say that the drivers of outperformance, just to be totally honest, typically are beyond the structural setup of the application. So the fact that it's an app chain in its own right doesn't mean it's likely to outperform or underperform, but a lot of the flexibility that's afforded by being an app chain can lead to a setup that can drive outperformance. And that's part of the reason why, I mean, one of the things that we haven't talked about is some of the regulatory benefits. Like you look at DYDX going to an app chain structure, part of that was for regulatory benefits, feeling like it positioned them in a safer regulatory spot. So I think dynamics like that can drive valuation accretion, but it's not necessarily just the fact that it's an app chain as much as that enabling a level of flexibility, which allows them to generate fees faster, to grow faster, to have a larger addressable market, and those are the things that drive valuations.
Yeah, I'll just add to that, and one tangible benefit of a application adopting Appchain is that it adds another value accrual to its own token.
Yeah.
So this can help outperformance, but as you said, there's so many reasons that drive performance.
That's right. That's right, and that would be the flexibility of how your token accrues value is one of those elements of flexibility.
Yeah, I think adding one more point is I think apart from the flexibilities or the potential upside, right? I think it's definitely about the narrative-driven factors, right? Because of given the unlimited flexibilities, unlimited upside, how the tokenomics can compare around, how the user experience could be polished based on the app-specific needs. It gives crypto retail users to have an unlimited possibility to think about how the projects, how the apps could evolve. Because at the end, if you're a D app under a specific chain, under a L1, L2, your throughput or at the end your flexibility will be hugely limited because of a chain, right? But if you're an app chain, you're way more potential than on a L1 chain, yeah.
Yeah, I think on my side, I think one point that I think is very intriguing for us is also from valuation standpoint, right? How would you kind of choose an app chain versus an L1? There are a lot of debates internally as well because I think one point that is very interesting is from how we look at app chains, we're kind of looking at bringing the kind of potentially Web2 crowd, whether it's on conglomerates, whether it's Web2 gaming companies, into building their own ecosystem on top of the blockchain infrastructure. So in kind of analyzing the value accrual, we'll also have to think about whether the value accrual actually goes to the token side of things or actually to the equity side of things, or even maybe there are actually creators coming on that would have to share the pool of economics, right? That may be a kind of, a wild card in terms of evaluating a app chain versus an L1, where L1 is basically, it's very crypto native in a sense in terms of returns generation.
Anything else to add on that question? Or we can move on to another one as well.
I mean, it's interesting, and this is not directly on that question, but when you think about L1 value capture, a lot of times L1 value capture is a much more qualitative, there's a lot going on here, right? Maybe it's TVL, but oftentimes it's not fee generation and it's not this solid line connection between that activity and value accrual and reflecting that value accrual in market cap for the L1. It's almost a bet that all of this activity, and a very valid bet that all this activity is eventually going to create value for the base layer. Whereas for app chains, you have a much more solid line value accrual often, which generally speaking for applications themselves, to see really good accretion, you typically need some line of sight into more tangible value creation and capture.
Yeah, just to add on this point is actually quite interesting because if you look at the new so-called app chains right now, it's very much focused on the supply side, right? So you have decentralized computing, decentralized data training of AI models, but that's more kind of, well, making sure maybe, well, compared to Amazon, for example, you have lower cost of actually mining and computing. But we haven't really talked about the demand side, which I think so far, let's say if you look at all the Peon projects right now, they are maybe empowering Web3 projects, right? But let's say if they're actually Web2 demand coming in, well, maybe an AI game, well, that really gets benefited from actually a decentralized kind of computing resources. That's when we actually see value accrual coming in a, well, exponentially different kind of portion, which I think we're already seeing some projects getting there, trialing and well, with some errors maybe, but yeah, that's something we're pretty excited about.
Yeah, I think that all makes sense. And I think kind of related to, we just started touching upon it at the end there, but there's kind of a chicken or an egg question as well related to app chains, right? Do you do DApp first, like DYDX, attract a sizable community, liquidity, users, and at that point, you pivot to your own app chain? Or do you think app chains from the get-go are also potentially going to be a successful go-to-market for brand new projects as well that don't have a community or developers yet, but maybe have some novel reason for deploying immediately as an app chain? And maybe it's a mix of both, but just in general, curious, what you think the more appropriate kind of roadmap is for a lot of these new applications.
Yeah, I think I can take a stab at that. I certainly think it should be DApp first. Since the very beginning of this conversation, I do believe that dApps that has great user flow should then move into the infrastructure side and become an infra app chain. The reason being, it's very costly to bootstrap your own security in the very beginning, right? There's a lot of concerns. Security is one. Interoperability is another one, right? You don't want these concerns to bother you. Your focus should be to gather as many users as possible to use your apps, right? And then move on to an app chain by utilizing this followers and users to bootstrap security, as well as using some of the up and coming solutions, interoperable solutions, Layer 0, Hyperlane, or whatnot to solve the interoperability problem.
I guess I would generally agree with that, but the one thing I would say is as time has passed, the cost of launching as an app chain has come down. So if you think about launching an AVS with restaking, securing your app chain, again, and we're not there yet, but that should be a lower cost economically and lower cost from like a developer bandwidth perspective approach. I'd also say there's like a very one-off or idiosyncratic element of evaluating this where for DYDX, again, started as a DApp, saw very good activity. We talked about regulatory, so they had a centralized sequencer. They were concerned about that was Starkware's. So they decided that it was more advantageous from a regulatory perspective to go to a more decentralized dynamic. And then secondly, they were able to materially reduce costs by changing to an app chain. A great example, though, of being at scale and then being able to make that decision that you could reduce costs by having your own app chain. So I think there's an idiosyncratic element, but structurally the infrastructure is maturing and the costs of doing app chains are coming down.
I think like when time evolves, like when the cost of launching an app chain is like lower and lower, I think like the proportion of launching app chain versus like the apps would change accordingly as well. But I think right now it's still kind of like a 80-20 rule. I think it's right now like as an MVP mindset, I think we should also launch with like the apps first because in terms of like the capital, the liquidities, the developers, the users are still on the like the main L1 chain, and like it's way easier like for you to like do a quick launch to like test out the market and like to have like a much more smooth experience first. And like if you feels like you got the right users, communities like that are willing to move along together with you to the app-specific chains, then like you can do it. And also when you think about like when you're at the moment that it feels like you got like too many like transaction volumes, like and you feels like the localized gas fee market would be helpful for you guys, and I think that would be the timing that you can consider to move to the app chain. Yeah.
I'd say so. If allergies. So if you go back to the question, Appchain first, because I think DApp first, DApp before Appchain, because for a Appchain to be successful, it has to be a good enough product that enough people use, right? So if you think of the successful Appchains like DYDX, Avo, Osmosis, right? Those are good enough standalone products, right? That DYDX was a standalone product. And then moving to our Appchain only made it more successful. But this was not the make it or break it factor for DYDX to be successful or not, right? And then just as a thought experiment, if we think of all the killer apps that crypto has so far, like StepN, Axie, Uniswap maybe, right? Let's say all these things launched their own app chain. Would their valuation be higher? Probably, like Axie was 20 billion. If you add Ron to it, maybe 25 at its peak, right? But the extra 5 is, it's only extra 5, but it already had 20 billion to start with, right? That's because the product was good enough. So that's just how I view it. So again, product first and then configuration later.
Yeah, I think that makes a lot of sense actually, and I think we might only have time for one or two more questions, but I want to quickly echo back to something, Sky, you actually mentioned at the top of this panel, which is it all starts with the big question, why Appchain? So I'd love to hear from all of you. Are there any other, in addition to why Appchain, are there any other key questions you have for Appchain teams, either when they're pitching you or you're just doing research in general, things that they need to answer related to their Appchain that as a prospective investor you'd be interested in hearing?
Yeah, I'll go first, maybe more intuitively. I guess this experience is also shared across the forum where, well, a lot of teams coming with their pitch tags, hey, I want to launch an app chain, right? I want to launch an L3, right? I think the key question is whether there's a genuine need for that and whether it's just as, well, the fellow panelists mentioned is just for the valuation premium. I think I understand, so I think right now from a kind of execution standpoint, much of an app chain is still partly narrative driven and partly kind of construction preparatory driven. But I guess the founding team needs to really kind of explain, right, in the kind of near future, in the kind of white paper kind of mind vision, right? What actually constitutes the different components of the validators, of the sequencers, and how would that economy work, right? The teams have to be able to explain that to convince, hey, this is actually a big TAM enough for us making an investment in a certain valuation. That's how I see it.
Yeah, I guess for us, when we look at like dApps and or app chains, we try to view it in a similar light, in the sense that I focus a lot on go-to-market BD efforts and the team. Just to build off my earlier point, I think the key here is to find good product market fit and get as many users as possible. I think going into infra, migrating to infra and commanding this infra premium was something you can think about later on once you get your user base. So yeah, that's something that I would be more focused on, how you get users in, how to attract new users, how to retain them, right? So yeah.
Completely agree. A lot of the same metrics that you would look for Web 2 applications, right? Those are going to be the biggest drivers of success for an application, and then the infrastructure is an enabler of that.
Okay, we're going to do a lightning round because we're out of time. is there any new Appchain infrastructure or Appchain project? Just name your favorite one coming down the pipeline. Maybe you can tease a little bit of alpha to the audience, and we can go lightning through all of you. Just shout out what project you're most excited for in the Appchain world, and then everyone else in the audience can do due diligence later.
Dora.
We didn't pay him to say that.
I would say EtherFi is an enabler.
I think Dora or like a Bearchain, yeah.
Interesting. I personally very interested in Stacker Labs. Check them out.
I'll just say check out some of the future launches of Animoca.
Nice. All right. Thank you, everyone. Everyone, give our wonderful panelists a big round of applause for making it out here today. Really appreciate all of your time and sharing some of your experience with the audience today. So thank you all.